The events overseas have clearly impacted Australia and continue to do so. And if you think about it, an economy is driven by demand and supply, and that's reflected in price. Events overseas affect demand and supply. And if you have information ahead of anyone else or that's going to affect demand and supply, then you can make money out of that because it's going to affect price and you can trade. And the efficient markets really rely on traders trading between markets, between countries, between asset classes to identify where there are pricing anomalies and to arbitrage those out in order to make a profit. So for example, if you have a piece of information ahead of anyone else in the market, you can trade on that very quickly in order to make a profit. And as long as it's not inside information and ASIC don't take interest, you should be fine. As we know, some people have crossed that line and hasn't gone quite so well. But this is nothing new. Reuters back in, I think it was the 1600s, used to try to arbitrage news. So instead of waiting for the ships to kind of come around the coast and land in London, he used to meet it off the tip of the UK and then transport that information either by land or telegraph to get it to the markets ahead of anyone else. And when some news came out of, I think, the Americas from, I think there was a change in the president, there was absolute turmoil in the American markets, but the UK markets were completely unaware until Reuters broke the news. And as a result of Reuters breaking the news, his clients made a lot of money as against people who didn't have that information. So it's been going on for hundreds of years, and it's all because markets are so interconnected and that there are profit opportunities if you can get news which affects demand and supply and therefore price ahead of anyone else. And those pieces of news that demand and supply has direct implications for the real economy. So for example, if interest rates in the US have been dropped, as we know they have, then you're going to expect the US dollar to go down in value and the Australian dollar to go up in value. Well, we've seen that. So what happens when the Australian dollar goes up? Well, we import more, we go overseas for holidays more. But we're much less effective in terms of our exports because our exports are far more expensive when expressed in the terms of another currency. And so there are very, very direct consequences and flows between the real economy and the financial economy. And we've seen that come through.